Thank you for joining us. My name is C.A. Balram Uchide. I am the founding partner of Spectrum Auditing as well as SBC Tax Consulting. So we are the auditing firm in Dubai with a presence in Oman, India, and USA. We have been providing services like auditing, accounting, taxation, which includes VAT and corporate taxes, transfer pricing, internal audits, company formation, and other consulting services. So along with me, I have Mahindra as well as Narendra who are going to take us through this session. I'll let them introduce themselves when they start their sessions. So with this brief background, let us just get into this webinar on internal audit. Internal audit in the era of corporate taxes. As most of you are aware of the regulatory environment of UAE, earlier there were no much compliances or not many regulatory requirements to comply with. So during which most of the internal audits used to be more of operational oriented or operational based internal audits. Now of late, since we have value added tax, ESR, economic substance regulation, and anti-money laundering law, country by country reporting, and then we have corporate taxes and transfer pricing now, and many other compliances are coming in. So in the light of these additional compliances, the internal audit role becomes more important. The internal audit function is not just only focusing on the audit as such or verification as such. Internal audit function or internal auditors also have to focus more on building the controls or building the procedures to be able to comply with this uh, evolved or evolution of the compliances. So if you take the value-added taxes, internal audit team has to develop the controls and procedures around this value-added tax compliances in the organization to make sure that whatever is expected by the law as part of the compliances, we are including or incorporating the procedures so that all the regulatory requirements are being complied through by following these procedures. The staff or the team may or may not be equipped to be able to implement the value added tax or other taxes. So that is where the internal audit department should come in and develop the procedures, develop the internal controls, be it from the point of view of approvals or be it from the point of view of documentary compliances and controls, so that the team are reasonably comfortable to comply with these additional requirements. And as we know, with respect to the ESR, anti-money laundering law, and little more complex area from corporate taxes and transfer pricing. So the procedures and controls play a vital role. And this also includes educating the staff or team members of the company or organization to bring the awareness about these compliances, make sure that they are understanding the regulations and able to or capable to implement the requirements of the law is also one of the important functions of the internal audit team. This internal audit can be done by having the internal audit department within the organization if the organization is big enough, or it can also be outsourced to consultants who have got internal audit functions who can take care of these internal audit requirements on behalf of the company and give this additional comfort. Not only from that point of view, even with respect to the auditors, when they give the audit report, one of the area where the auditor is expected to comment on is with respect to the internal audit function. They need to comment, they need to verify, and they need to comment on the sufficientness of the internal audit function within the organization. Whether the organization is having the internal audit team or outsourced to an internal audit consultant, wherein they are able to make sure that the internal controls and internal audit requirements are being complied with, that is sufficient and it has been implemented, and whatever suggestions that internal audit department or internal auditors are giving are being implemented by the top management so that the organization is run with necessary compliances and necessary improvements that are required from the additional compliances. So from statutory audit point of view, from tax and other compliances point of view, the internal audit is becoming more and more important. So, with this background, I would like to invite Mahindra to take it forward. Before that, can you just open the second slide, Mahindra Garu? So, these are the areas where we are going to talk more about, as we've quickly pointed on the internal importance in the corporate tax era, as well as in normal compliances that we have been looking at, and other tax issues that in within UAE or within the geography or Middle East, as well as the globally, how internal audit functions have been helping the organizations to comply with various regulatory requirements. What are the essential requirements of internal audits? How internal audit can proactively help avoiding tax penalties and prevent other issues before we get into, and key corporate tax risks as well as controls that we need to look at. And especially for SMEs, what kind of challenges? Maybe you may have cash embezzlement or asset embezzlements or misappropriation, as well as financials and financial related controls also are one of the areas that internal audit will have to be considering and implement or bring in those necessary controls and processes. And cost of non-compliances versus investment and benefits. So most of the times we see that cost of non-compliance is much higher than cost of implementation or compliance. So what are the pros and cons, benefits and costs that are involved can also be looked at. And of course, internal auditor also can play a vital role in decision making. So in that perspective, what are the various statistics that one should look at as part of the internal audit, and then how internal audit department of function can help the management in taking the decisions. So in which the internal audit department and function can come in handy to be able to make the effective decisions by by the decision makers. And we'll try to open the forum for the question and answers if time permits. Meanwhile, if you have any questions during this session, you can definitely drop in your questions in the chat box so that we can either address them during the session or over a period after the session. So this is what we just would like to cover in a nutshell. With this, yeah, I would like to invite Mahendra Garu to take it forward. Over to you, sir.
Thank you, Mr. Balram. Good evening, everyone, and hope after lunch it's a difficult time for the kind of seminars, and making your time to for this presentation is I'm very much thankful for that, and I appreciate your efforts. So
Good
to
evening,
introduce
sir.
myself, hello.
Good evening, sir. Next time, sir, try to make these webinars happen in the morning session, sir. So it will be more uh, good.
Yeah, we consider your feedback. Thank you. Uh, to introduce myself, I'm Mahindra Kunku. I'm an internal audit professional, having 20 years of experience in accounting, taxation, the costing, and internal audit and external audit domains. Uh, I worked in different industries, in construction, the manufacturing, financial services like banks, etc. And even the oil and gas. Currently, I am handling the oil and gas project. So I'm happy to share my knowledge on the internal audit with respect to the taxation compliance. I hope you enjoy the inputs which I am providing, and let it be the a kind of um, knowledge sharing session. Even I'm open to take the inputs from the audience as well, wherever it is required, and let it be the more interactive in terms of if you have any questions, you can stop me and ask at that time, or you can put in the question and answer chat box, which we can deal at the end of the session. And few disclaimers I want to make here. The content, whatever I have taken based on the see purely to explain the concepts for better understanding, and to know the intricacies in terms of the risks and controls. So I have taken some facts from the public domain, but the accuracy is not validated. And this is the disclaimer I want to make at the beginning itself. So wherever the examples or the cases quoted, it's only for illustration purpose and to understand the internal audit concept. Okay, with that, let us understand and discuss about these topics. As Mr. Balram said, the importance of the internal audit in corporate taxation compliance, the key corporate tax issues which were highlighted by the internal audit, and let us understand what is this internal audit and what are the different elements of internal audit as a fundamental, conceptual knowledge. And then the risks and controls in taxation, basically the key risks, and the small and medium enterprises, what kind of challenge they have in case of complying the internal audit requirements, and what they can have the solution as well. And a kind of a brief comparison, like the non-compliance cost versus the investment you made in the internal audit department or internal audit activity. And then finally we will have the role of internal audit in decision making and the question and answers. See, I want to just give two real-time experience, the cases which I noted, with that as a context setting, and go further. For example, you know very well in India there is a tax deducted source or the withholding of tax, and every quarter they need to file the returns. In that, the TDS or the tax deduction at source will be different for companies or the other than companies. Say for companies it is 10%, for other than companies it is 5%. I have seen in the construction company where I worked, the subcontractors are it's a huge, thousands of subcontractors are working. uh, the category of the subcontractor is either company or non-company. My previous, executive or the employee, well, they didn't much bother about this, when they are filing the return, giving this category of code, whether company or non-company. So they just filed the return, quarterly return and all. Uh, when this processing cell was introduced by income tax, they processed all the previous year returns, and then they applied, if it is a company 10%, if it is non-company 5%. Since they have not classified this company as non-company in their return properly, there is a huge demand was sent to by the income tax department to this company, asking more liability, I mean the tax due. So this is one example where it looks very simple, but it has huge implication. So that's the place where the internal auditor will come and check as a preventive step to see whether the return has been filed, or whether the classification or the completeness or the accuracy of the data in the return is okay or not. So this is one example to set the context how the internal auditor plays a role in avoiding all these non-compliances or the penalties or the excess taxes paid. Here I am highlighting some of the testimonials given by different institutions in the across the globe to highlight the importance of internal audit. The Organization for Economic Cooperation and Development, the tax administration framework says that internal audit provides independent assurance over tax control frameworks to mitigate compliance risks. So this is a kind of testimonial to say, the role of or the importance of internal audit I have considered. So generally we see, right, in even when we go for employment, we check the background or reference check, etc. So that is a kind of evidence that yes, this candidate is genuine. In similar way, I have taken these some of the statements in the public domain to highlight the importance of internal audit. Yes, everyone knows that the internal audit is very much helpful, and it is growing, and it is playing a vital role in terms of value addition, in terms of avoiding the risks of different risks of the company. So, however, I am just reiterating with the statements. The instead of internal auditors, it says that internal audit plays a vital role in ensuring organizations comply with evolving tax regulations through continuous monitoring and advisory. This is very, very important here. If you see the UAE corporate tax regulations, every day you see some changes. Every day you see some update. Every day you see some circular or notification. So it's a dynamic domain or dynamic subject where everyone has to cope up by continuously updating their knowledge as well as continuously looking after. So the continuous monitoring and advisory, if it is missed, it's very definitely the companies will end up in non-compliance and face penalties. So the continuous monitoring is important aspect which was highlighted by Institute of Internal Audit. The Chartered Institute of Taxation UK, it says that robust internal audit function reduce tax risks, enhance governance by embedding tax compliance into enterprise risk management. This is another important element, the risk culture of the organizations. Okay, so every company has to assess the probable risks, what are the based on the nature of the business, based on the operations, and even the systems which it has dependent. So based on that, every company has to have a kind of enterprise risk management framework in place, where you need to include these taxation related risks as well as part of the enterprise risk management. That kind of risk culture ensures the avoiding any penalties on the non compliance of this taxation area as well, apart from the other operations. See, what ultimately what the gist is, the internal audit over taxation is not new. Other like Apart from the like auditing procurement or auditing sales process or auditing the IT operations, etc. So since the UAE has come out with the new legislation, new regulation, like how we have the GST in India, it's a new regulation which has come. Even the Companies Act introduced. So when the new things come into place, so definitely the company should address that through GRC mechanism. It's called governance, risk, and control mechanism. So there should be a process document which clearly says the roles and responsibilities, and the who has to do what, segregation of duties over that process. For example, tax filing. So who has to do tax filing, who will provide the data, who will review the data, who will approve that return, who will upload that return to the tax portal. So these are all the roles and responsibilities. These are all come under the part of the governance, and what are the risks in that taxation area, and what kind of controls must be. So this is in summary. So this is not different from the other operational audits, but since it is a new area which has come up, we are dealing with this. And the FTA corporate implementation guide, it says that taxpayers must establish strong internal controls, which Mr. Balram has highlighted. The companies must have internal controls in place. Even these internal control systems are required, though it is mentioned as a implementation guide here, but it is mandatory as per the respective regulations of different authorities. For example, if the company is a listed company on Abu Dhabi Stock Exchange, so then your SEA will come into the place. Then if you the SEA definite SEA says that you need to have the internal control systems in place, and those systems must be effective, and those systems are operating effectively as well. Not only existence, it needs to be tested. So this is what the SEA says for the listed entities. Similarly, if there are any government entities, the like banks, etc., the central bank, if you see the central bank CBUA legislation, it will say that the internal control system. So uh, that's the importance I want to highlight here. Then the annual report 2024, it says that internal audit is a critical component of corporate governance frameworks. if you see any corporate governance framework, the internal audit, internal control systems, and the risk management, these are all inevitable. So you can't, there is no corporate governance without these elements. Then the federal decree law, this is actually explicit. It is, I mean, it is not, sorry, it is implicit. It is not explicit. I mean, it is not directly, it mandates the internal control system. It is through the other laws, as I said, like Central Bank of UAE or the SEA, or which are all the regulated entities are coming in the place. And if you see the in terms of, the facts and figures, see the average cost of non average cost of tax non-compliance is USD $14 million per event. This is the audit board survey of 2025 says that. So it's a huge amount. On an average, it is like, in this, the small, big, medium, all these companies average amount, they when they did survey, this is the, so this also says that, to save this money, the internal audit must be in place, and it is very important. Okay, and this is a 100 million is the, the calculation figure, hypothetical figure in 6 months. If you don't file the returns, so under UAE laws, this is the amount it comes at. Then 55% of CAEs, the chief audit executives, basically the heads of internal audit departments, cover now tax, ESG, and broader risk functions. And every year there will be surveys on the risk management. Cyber security is has come to the first place of the risk, and on the ESG is the second. ESG now it is come to the second, and third the compliance risk is coming. So the surveys are saying that the compliance risk to be addressed, where the internal audit is the right function to address it. Definitely, even the external auditor, even other entities are there to take care, but as a specific role, the in terms of the internal audit, the knowledge or the skill set uh, are required to address these issues. I think internal audit teams are the right teams to address these issues. These are the some of the corporate tax issues which were uncovered. I mean highlighted by internal audit, but these cases are already happened post audit. These cases were come to know by the internal audit. The WorldCom, they were cooking the books by inflating the revenue and then manipulating the taxes, etc. So where the internal auditor found these issues, and the impact is around $3.8 billion. Then there were the other case, other instance was like the classification of the expenditure. You know, the capital costs were treated as tax deductible business expenses, and then they were paying the less taxes. That is the second instance on the classification of the expense. So these are all instances also will give an idea where the non-compliance or the risks can happen, and it will give an idea to the internal auditor to look at those issues specifically. I have there apart from these issues there are many, but just for considering the time constraint, I have brought only few cases here. Then the on the transfer pricing documentation, so they were not following the arm's length price to support the price between the related parties transactions. So the tax authority is dissolved. This happened in US. Coca-Cola is the entity. Then the under reporting of taxable staff tax. Okay, this again, deduction of expenses was not proper. Then the next issue is the governance issue. There is no tax policy. This is where I think more efforts to be put in, because the UAE is in initial stage of the tax infant stage, I can say. So there, the internal auditor can help the business to setting up the taxation policy, defining the roles and responsibilities, and any the today the technology is, you can't avoid the technology. Technology is inbuilt in the system now. That's why they are calling it as enterprise governance over IT. Earlier it was like IT was a support function like finance, cost, etc. Today, without IT, business is impossible. So that's the, even you see, sometimes you will see, even personally also, the banks will inform, from tomorrow 5 to 7, the ATMs or the our bank servers are will not work. So that 2 hours is a business loss. So that is, to that extent the systems have grown up. So right systems for monitoring the compliance, or helping or supporting the taxation. So that's also uh, is to be seen. But those systems must be, in terms of controls, that must be very strong. It should not be like outdated system where there is a possibility for cyber attacks or other IT risks. Then the next issue was non-compliance with deadlines or material misstatements in returns. As I said in the beginning, so if there is a problem in the return, that will give you more penalties, interest costs, whatever, that is a non-compliance. So that will have huge risk actually. So we need to file the return. You know very well that even in India, if you don't pay the advance tax in time, the interest is applicable. So you, as a company, the company has to assess every quarter when they have to discharge the the advance tax, and those deadlines, filing deadlines, needs to be seen. Suppose if you don't file the return, then the interest applicable and penalties, all that. So these are the some of the key risks which were identified by the internal audit globally in US, UAE, Canada, India, and all like. So after seeing the real time cases, we talked about why internal audit is so important, and where the internal audit helped actually. Now let us understand the concepts of internal audit. So what is the definition of internal audit? I'm going little fundamentals. I don't know how many of you are from internal audit backgrounds or other than internal audit. Uh, just to refresh the basics of internal audit, I have just even the people who are not from internal audit background, just to throw some light on what is this internal audit and what are the different elements of internal audit. Internal audit, the definition, this is given by IAA, Institute of Internal Auditors. This is a global body which sets the internal audit standards. Though the respective, accounting bodies, they set, even in India, we have ICA. ICA has its own internal audit standards defined. Even Costing Institute have its own standards. Apart from these are all the regional based. So these, what I am talking is the globally followed internal audit standards which were set by IAA. Generally, we all companies, they try to benchmark the internal audit functions against these global internal audit standard frameworks which were set by IAA. Okay, so it has defined internal audit as an independent, objective, assurance, and consulting function that improves operations by evaluating risk management, control, and governance processes. So this looks two lines, but the explanation goes maybe more than 3 4 hours. Let us understand what is the independent function. Internal audit is an independent function. How the independence is given to the internal audit? It is through governance mechanism. So the internal audit is autonomous. How it is autonomous? It has been empowered. It has been given authority to access any file, any document, any person. It can go and question anyone in the entire organization. That was the power given by the board of directors as a, how it is ensured further as an independent is the head of the the internal audit function. It directly reports to the audit committee, which is a subcommittee of the board of directors. Okay, So the independence of internal audit function is ensured by giving the reporting relation directly to the board of directors. For administrative, this is functionally. For administrative reasons, yes, they may report to the CEO or the senior management, whoever is there in the organization. That is for administrative purpose. But functionally, they directly report to the board of directors. That's the way the independence is given, and he will not be influenced, or he will not be troubled by any person in the organization, and he has unconditional access to the records. That is given through every internal audit department will have its own charter. Like board of directors will have board of director charter. In that charter they define the authority, responsibility, and the role of internal audit department in any organization, and that charter is approved by the board of directors, and that's the weapon given to the internal auditor to become independent. And the next is objective assurance. Objectivity needs to be ensured. That is unbiasedness. So whenever the internal audit is doing certain areas, the conflict of interest needs to be evaluated, and then if there is no conflict of interest, then it needs to be the internal auditor can go and work in that. For example, uh, you are going to audit, I mean the internal auditor is going to audit a related party, I mean a relative company, or the some relatives are working in the department, or the internal audit team includes a person who has come from that department. Say for example, one guy, he has worked in procurement department, and now he has, due to role change or whatever, he has become the part of internal audit team. Now the procurement process is to be audited by this person, then it is a conflict of interest. The standard says that after 1 year only he can go and audit the procurement with the permission of the head of the department. So this is just one example I am giving on the objective or unbiased assurance. Okay. And the third one is the consulting role. This is where now the internal audit is growing, transforming, as Mr. Balaram said initially, though it is a tick based audit earlier, now the internal audit is transformed to a level of business partner. So for every business decisions, the internal auditor is becoming part of those decisions to enlighten the team on what could be probable risks and the controls supposed to be in place. In this line, I have participated at very senior level management meeting one time in the construction company, where they were dependent on there is a project where 80% of the materials will be given by the construction company, and the 20%, that is the software, which will be given by the software provider for that project. So this 80% guy is dependent on 20% contribution from in terms of only the software. Suppose tomorrow the CEO was asking, I just faced this, I mean, I was listening to the conversations. The CEO asked the question, tomorrow what will happen to us if the 20% the software provider turns, or he just become or he run away from the project. So what kind of mechanism are you are the so this is the risk. This is the inbuilt risk we have. So what kind of control are you going to have? You taken any a kind of bond from him, the guarantee bond or the bank guarantee on the performance? So what are have you withhold any deposit, or are you taking any? So this is the kind of role the internal auditor is going to play as a partner. It is not that always ensuring the assurance function. See, this there are two functions here. One is assurance, and second one is consulting or the advisory function. So, if you go for advisory function, definitely these are all like independence and objectivity also to be considered, but not to that extent. Okay, so hope the definition and the purpose of internal audit is clear. It is an independent, objective assurance and consulting function in the organization to help the risk management, controls, governance process, etc. And to ensure the consistency of the practice, okay, we have these standards meant for consistency, and to ensure the quality of the deliverables which we are providing to the client. So that's where the standards place. Even internal auditor, we have the global internal audit standards. Again, the standards talk like you have CA, you have your own ethics and professional ethics and SBA. These are all standards are there. Similarly, we have, I mean, internal audit function also have the standards which talks about the core principles like integrity. As integrity is honesty. You should not involve in any bad practices, with the cheating or frauds. That is the place of, that is the first quality they expect from the internal auditor. Integrity. Then objectivity, like unbiased. Confidentiality. You know very well, as a professional, we sign the confidential the non-disclosure agreement, NDA. Then the competency. This is the skill. Do you suppose, say for example, you have been asked to do the IT systems review? Do you have proper qualification, knowledge, or have you done those audits in the past? So this will be checked. Without that, if you don't have that competency, you are not supposed to do that. You are, if you do without competence, if you are performing, means you are deviating the standard. So, and your work will be questioned. So in that case, what is the alternative? What the standard suggests, that if you are not competent, go for an expert outside, third party. Involve them. And that's where we are helping, right? The companies where they don't have sufficient skilled manpower for the taxation or other areas are concerned, accounting, where they are approaching the third party and they are doing. Similar logic applies even in internal audit as well. And the other components are definition, as I explained earlier, and the performance standards, then quality standard. The quality, it's a review of, it is audit of internal audit actually. So whether the internal auditor has performed the risk assessment properly, whether he has done his professional job, any is there any professional negligence in performing the job, which resulted into misstatements or giving wrong results, etc. So basically the quality, the performance, and the core principles, the professional ethics, all that, this is the global internal audit standards speak. So this is the base for the internal auditor to ensure the consistency and quality of his deliverables. Then the three-line model. This model is devised by, again, IIA, to define the internal auditor where he stands. Where he stands. He stands in third line. The first line is the business owner, the process owner. For example, if you take the taxation department, so the tax department head will come in the first line. His responsibility is defining the taxation policies, filing the returns, reconciliations, all that. That is the duty of, that is the role of the first line. What is second line? The second line is a support function, again, the risk management functions. This risk management function is there to support the first line wherever they are lacking in terms of identifying the risks, monitoring the risks, and reporting the risk movement to the management. So that's the place, like the compliance team, the risk management team, all these guys will come in the second line. The third line is the assurance function, that is the internal auditor. Internal auditor assume should not assume the owner role. If he is assuming the owner role, means he is auditing his own work. That itself is a conflict of interest, and that the purpose of audit is defeated, and the independence is, even the objectivity is lost. So The internal auditor stands at third line. He is basically a watchdog, a monitoring person, and he will go independently review as per the policy, procedures, legislations, regulations, etc., and then assures that may be taxation area, that may be any area. So his role is only to review those areas and give the opinion, the assurance opinion or assurance results or the consulting results to the management. But in case of assurance, this is strict. But in case of the consulting function, some liberty was given because there it is, it is like more of advisory or partner to the business. So in case of consulting engagements, yes, you don't have any much problem on the conflict, etc. But when you are taking up the assurance function, assurance engagements, why I am saying, when you assign the taxation engagements to the auditors, internal auditor, the internal auditor must see whether it is an assurance engagement or it is a consulting. Suppose you may ask, boss, I don't know, based on my areas, what are the different taxes applicable, or the classification, or the GLs to be created, or the systems to be implemented. So all these will come under the consulting engagement. So this line model is a reference for to understand the roles, and we have the framework. So then the question comes, how I can build the internal audit, I mean the controls or the processes into place. So there are reference frameworks in the domain. That is, you have COSO internal controls framework, you have COSO ERM framework, you have ISO 31000 framework, you have the COBIT framework for IT governance. So these are all the different frameworks for reference to build your controls uh, as per the business applicable risks. So it says that the framework says what is your control environment, how the risk assessment needs to be done, what are the controls must be in place, and what are the different documentation to be maintained, and how the all the above will be monitored. The last is the COSO. They have 5 components. The first component is control environment. It talks about the board of directors, the tone at the top, and the human resource policies, and whistleblower policy, code of conduct. All these your policy, the governance mechanism plays into the control environment. The second component is risk assessment. Risk assess, how, what are the different types of risks, how you are assessing those risks. You know the definition of risk. Risk is equal to probability of event and multiplied with impact. Suppose there is a penalty of $10 million, and the probability violating that law to attract this penalty is, say, 50% probability. So the impact or the risk involved is $5 million. The impact into the probability, that is the calculation for the risks. And based on criteria, you can put into different baskets. Suppose if it is $50 million high risk, if it is $1 million medium risk, if it is some 500,000, I mean 5,000, whatever. So that's the way you calculate high, medium, low. That is the risk categorization. So you need to calculate the risk, you need to assess the risk. Assessment of risk is nothing but measuring the risk and bucketing that into different category for prioritization of addressing those risks. So that and all is talked about in the risk assessment, I mean risk assessment component. Then the control control management, the third component. And the in the control, yes, you have the risk. So what kind of controls? We will see in the further slides what are the different risks and how the controls will be identified to mitigate those risks. And the next one is information and communication, where the exchange of information happens between different, like you are filing the return, or you are sending some mails. These are all part of the communication and information and communication. MIS basically. When you need to present the, on the taxation penalties, any legal issues, even finance also, you present your performance monthly and other things, right? So basically that MIS is uh, put into this information and community. And the last one is the control monitoring, I mean monitoring component. Monitoring component is uh, like internal audit, external auditor, the government agencies who are basically monitoring the entire gamut of this, controls and risks, etc. So this is what the COSO cube. So that is the reference for us for the internal audit function, where or the companies to uh, uh, to establish the controls. And there are various types of risks like strategic risks, operational risks, financial risk, compliance. These are the different risks you will have. Here I want to highlight uh, what is inherent risk and what is residual risk. Inherent risk is the risk which by default. Residual risk is the risk which will be remain after exercising the control. Then there are different types of controls. Preventive preventive control is basically to avoid the risk, and detective control is to identify the risk, and the corrective control is to bring the system back into that. So these are the essential elements which we need to understand as part of the internal audit. So this is after understanding the internal audit concepts. So this is the end-to-end tax compliance through internal audit. So you, as I said, you need to identify the tax, I mean risk, and you need to have the control. You need to design the control, and then through execution you need to test the control whether the control is working properly or not. For example, you need to take an approval to make some payment. So the you have already defined for these amounts you need to have a approval, but you need to check as part of your internal audit whether the approvals have been obtained or not. So that is as part, and then if there are any exceptions you need to report, and then the continuous monitoring happens. So this is this is the backbone of the process cycle for any area. I mean, not only tax, even procurement, other areas as well, the same, like the GRC is same. And these are the some of the cases where proactively I have just found from public domain. The accuracy is we need to see, uh, just for understanding, like there were some TP documentation issues, there were some misclassification of goods, and there were tax return errors, and there were benchmarking studies. So for the TP documentation, and see the previous cases where after the it is a detective, but here it is preventive. On a preventive basis the internal audit helped the taxation department to avoid the penalties, etc. So these are the some of the risks and the control. For example, there is a risk of registration delay. The root cause is the process owners, they are not aware of, okay, whether they fall into, I mean the companies fall into registration or not. And there is even sometimes the portal issues, sometimes the resource gap. So these are the root causes. So what is the control? Then you should have a checklist, you should have a monthly review, and you can have, if you are not expert, you can have an outsourced agent. And this is the impact, and this is the legal reference. So this is the way you can have a risk control matrix, RCM, I can say. So what is, you need to identify what is the risk for your for with respect to taxation, what is the risk and what kind of control, and the documents you need to, so that internal auditor or the third party will come and verify. You already designed the control, like creating checklist. So when the auditor comes, we will check whether he will obtain the checklist and then see whether the checklist is in place or not, like. Then in case of free zone compliance, see, this is more important, the qualifying income confusion. and most of the time the records will not be kept separate for mainland activity, I mean the and the free zone activity. So those these are the root causes actually. So you need to build the self-assessment, annual reviews, etc. Okay, then the tax computation errors. 64% CFO struggle because that is the survey shows that there were a lot of tax computation errors which caused penalties or non-compliance, etc. The depreciation, yeah, I have a lot of examples in I have seen in my experience where the useful life issues have come up, that resulted into different tax calculations and then resulted into tax penalties. Then the transfer pricing issue, as I said, the in case of transfer pricing, you should have master document, local file, the documentation gaps. See, 29% they have still the documentation gap on the TP documentation front is concerned. Then the UAE, it has a small business relief. This was misused, and 20% of the people are not aware of this small business relief, which is much beneficial. Okay, then the late filing and payments, which we talked about earlier. Then the update, ignoring the tax updates. So uh, as I said, it is dynamic and regularly we are seeing the tax updates. So you need to track those updates, and accordingly the compliance has to be improved. So these are the some of the challenges for the small and medium enterprises as far as the internal audit function is concerned. They may have the low budgets, they may lack resources, they may lack in-house tax audit expertise, and because of the evolving tax regulations, and they have the risk of misreporting, okay, and inadequate documentation. Then they have weak compliance governance. Maybe the owner or the management may not well versed with what is this governance, etc. So they will not have policy procedures, nothing in place. So these are the some of the challenges. Then because of the budget constraints or lack of resources, those are the two main things which are the challenges that can be addressed by outsourcing the internal audit activities to a third party, and maximum automating their operations with very cost effective softwares, and sometimes conducting training for the in-house team. Then doing risk based internal audit, highlight only wherever there is no much risk, then no issue, but wherever the high risk is there, those areas prioritizing, so that you will not waste resource on the non not highly risk areas. So that's where the risk based internal auditing will plays a role. Then the periodical audits to conduct the errors, then the record keeping, uh, voluntary disclosures, this will reduce the risk. Then adopting the scalable GRC frameworks, as I said, adopting some frameworks to have the governance in place. Whatever, with respect to the size of operations are concerned, what are all the GRC applicable clauses are there which can help to better comply. So those things they can adopt. So these are the some of the solutions for meeting their internal audit requirements by the small and medium enterprises. So if you just compare the cost of non-compliance versus the investment in internal audit, if you see here, you have the penalties ranging from 10,000 AED to 500,000 AED per event, and interest charges are 5%. Transfer pricing related penalties to 50,000. Late registration, losing the free zone benefit. Then the lender confidence, I mean bank financing risk. If you if you don't comply, definitely that will have impact on your funding aspect. Then remediation fees, like again for those problems, again you need to go to the consultant or advisory after the incident, I am saying. So these are all some of the estimates which we take from the public domain. And then if you take the investment in audit, so if you outsource the audits, the maybe the fee may come 50,000. I put on a higher side, maybe less also. Then you can spend on audit automation, early risk detection. Then instead of last minute compliances, so you can fix easily. So these are all the benefit side, and this is the cost of non-compliance. As Mr. Balram said, obviously the cost of non-compliance is very high because it is not known, it is uncertain. So what kind of non-compliance you face and what kind of penalty will come is uncertain. That is the reason this left side is always more than the investment side. So accordingly, the companies can go for spending amount. If they have in-house, they can. Otherwise, outsource those internal audit functions outside. Yeah, thank you so much. That's all from my side. If you have any questions, we can address later or after Mr. Narendra's presentation. Over to you, Narendra. Thank you.
Thank you, Mr. Mahendra Garu. I think it was a very wonderful session and presentation by you. I hope you covered from KG level to PG level. So if I see, you have covered from very basics to a very advanced level of impact, like you have mentioned. So the very interesting part is like end of the day, every business owner will feel what is the cost benefit analysis. So the last slide, like got me, so it got my attention. So what is the cost benefit analysis? So what are you investing, how much you are investing, and how much benefit you are getting? So that's what I feel. Yeah. Good evening once again, everyone. My name is Narendra Kottu. I'm a chartered accountant of about 10 years experience. I'm working as a CFO manager in Spectrum Group. Yeah. So in my session, I want to cover on the very practical aspects, like every business owner will feel like what is the benefits that we are getting. So I want to present, like a traditional internal auditor will cover the basic compliance and risk assessment and all other things, but the expectations of the clients have changed. Like modern auditors should go beyond, so they should provide a value in their decision making. So I'll try to put those areas where we recently come across. Yeah. So first of all, the most important number of any business we want to know is the BEP, break even point. So what is the break even point? So break even point is the minimum amount of sales where we need to bill in order to survive our organization based on the given capacity. I will give more insights on this. So selling more units than the break even point, you are in profit. So selling below break even point, you are in loss. How it will be, we'll see with a simple example. Let us say we have a sales of 50 million and a variable cost. Variable cost means the cost which will vary with the turnover. So it is 70%. So if it is 35 million, then contribution will come around 15 million. If you see fixed cost in our example, under ideal situations, don't take this as a standard example. Just under ideal situations, we are trying to present. So fixed cost, if you assume 12 million, so your net profit is 3 million. So here, what is my break even point? So break even point means it is a situation where you don't have any profit or any loss. So if you replace in this example, if you replace net profit 3 million with 0, your sales should be 40 million. So which means under this situation, in order to cover your 12 million of fixed cost, you must do a minimum 40 million of sales. That is your break even point. So for every business organization, the business owners should aware of the top level management should aware what is my minimum, what is my BEP, which means what are the number of sales that I should do in order to sustain at a given capacity based on my fixed cost. So that is BEP. Maybe any doubts you can ask me in the later part. So this is all about the break-even point. So how internal audit will help in finding the right break-even point? and what are the uses of this break-even point. Let us say, without having a proper internal audit, the inputs of BEP, let us say if you don't have a proper accounting system, or if someone is not verifying it properly, so how would you know the difference between the fixed cost and a variable cost? So because it is a very crucial to understand what are my fixed cost and my variable cost. So internal audit will help in those areas. Next, we should once we are good with BEP inputs, we can identify. For example, we are doing in products trading business, so we can understand what are all the products that we are helping to contribute more, and what are all the products that we are dragging our profitability. So in that aspect also we can use this. And let us say the very million dollar question is like, in order to the investment decisions. So in order to spend some amount on something, what are the minimum amount of sales that we must do? So for that, we took, let us say in the previous example, let us say if we want to recruit an employee of having 10,000 AED as a salary, what are the minimum, let us say if he's a sales professional, what are the minimum amount of sales that he must do to sustain at least his salary? If you go back to the previous example, just we need to understand, in our case this fixed cost is 10,000, so 10,000 by 30, we should have minimum 33,333 extra sales in order to sustain his salary. So in order to have these kind of decisions, the break-even point will play a very crucial role. So till break-even point, we must be very conscious on taking the cost and on reducing the cost prices or increasing the prices, that we will discuss in upcoming slides. So what are all the other benefits of this internal control? We can see here. So internal control will help. What are the costs that we can avoid, so that we can lower our BEP, and we can have a monthly tracking of break-even point so that we can adjust accordingly. So if you see the insight, an inflated or miscalculated BEP can misguide management decisions. This is for sure, right? So internal audit ensures reliability of the number that defines business sustainability. Now let us, so every business owner's intention is he want more sales. At the same time, he want he want to give some discounts, and at the same time he want to have some good profits. So the both are contradict to each other. So how to handle these issues? Let us see. So if you take an example, for example, if you have increased the 5% of sales price, so it has a huge impact on directly on your GP and your NP, gross profit and net profit. Let us say till now you are at 40% of gross profit. A simple increment of price will give you the immediate impact to the gross profit. Let us say it will move from 40% to 45%, and net profit of 10% to 15% without having any other effects, right? But is it justifiable or not? So if you simply increase your price, so is the customers will accept just like that? Let us see it. So what are the considerations before implementing these kind of decisions we should see? So customer perception, whether is there any value that we are increasing along with the price increment, is what we need to see. And the price elasticity, how sensitive our price on our volume of the sales. So for every 1 dirham of increment, we must see how the market is sensing, like regarding the sales, regarding the dip or increment in the number of units, we need to see. And the same time, the competitors pricing. So how the competitors, if you are a whole and sole distributor for a particular product, then that is a separate story. But you are in a competing market, then you should see before doing this thing. Next, product differentiation. As I mentioned, what are the features that you are adding in order to justify this increase, right? And what is the internal audit role in this aspect? So we should understand whether the pricing model aligns with the value delivered or not. So this again a decision making. So for in every area, an internal auditor will help the management to take informed decisions. And it should, we need to take the historical sales trends, whether the price increment in the past, in the history, whether you have done any price increment, how it got affected. So that also we need to see. And we need to understand the feedback from the customers. And there is a big risk of volume drop. As I mentioned rightly, for example, in the previous example, if the 40 million is my BEP, if I increase my price, if I go below the 40 million, then what happened? Then what will be my position? So we should be very carefully play when taking these kind of decisions. So it should be properly aligned with the internal audit function. Next, as I rightly mentioned, at the same time, they want to give a discounts to increase the volumes of their business. So how the improper discount will affect your profits? Let us say an enterprise is decide to give a 10% price cut. I will give a simple example. For example, we are selling at 100 dirhams or $100, and our cost of goods sold is 60%, for example. So our fixed cost is 20. So our net profit will be 20, right? 100 minus 60 minus 20. So if you reduce your price simply by 10%, your cost of goods sold won't reduce, because you are just reducing your selling price, but not your supplier will not give any discount, right? So our cost of goods sold will be there on at 60 only. So if you see the net impact, your net profit will down from 20 to 10, which means a simple 10% of discount is cutting half of your profits, right? So we should have a proper analysis, and we should not give direct discount in this aspect. This is an ideal situation, so we should go case to case in a real scenario. So within this aspect, what is the internal audit's role in the discounting risk control? You need to see whether who in our organizational hierarchy, who is approving the discounts without knowing the impact. We must control it, and we should understand the profit erosion. How, without having the justified discounts, if you issue discounts in order to get your contract or get your business, it is not if it is not feasible, then ending up with the profit erosions. And again, we should test our controls for unauthorized discounting at sales level. As I mentioned, generally the salespersons will tend to give a discounts without understanding the proper impact on the discount. So how we can mitigate these risks? So we should have a proper strategic recommendations, like value-based pricing over reactive discounts. All of a sudden, if you reduce your price, then definitely your sales will increase for sure. So instead of that, we need to understand, so can we do any bundling, like the slow moving items with the high moving items? If you bundle, instead of reducing your price from 100 to 90, you add some more products that are not moving or slow moving products. So that is one kind of recommendations we can have it. And volume based rewards, you may aware of these reward points, like if you buy more and more, they will add points to it, and all of a sudden on a particular point of time you can redeem the points. And time bound promotions, let us say in the month of August we are running a clearance sale kind of things, and other value enhanced discounting, not just a traditional discounting, is what here we need to see. So internal audit ensures discounts are data backed, controlled, and aligned with margin goals, not a default sales tactic, is what we want to conclude here. And the next very important aspect where we recently come across with, till 2023 in the UAE region, so most of the people are preferred to have a combined set of books. Let us say they will have one holding company or subsidiary company, or where the owner is having two different licenses because of the so and so reasons for the same company. They are tend to maintain this books of accounts in a for both the companies, they will maintain a single set of books of accounts, which will have some problems, and we need to discuss on this aspect. And the only exception for this is where there is a corporate tax group. So when there is a corporate tax group for the different entities, then they can go for a combined set of books of accounts. But other than those certain conditions, no one should maintain a combined set of books of accounts. So let us go very practical issues that we come across, so that we can understand more about the issues of combined financials. So the most important thing is inventory and cost of goods sold. So what issue we found is, like, one company has a huge negative stock. For example, let us say one company is having a different locations. Let us say it has 5 locations. So ideally what they do is, they will buy everything from head office, and they will distribute to their own locations. And for example, if all the 5 locations under same license, it is well and good. But sometimes what will happen, though the maybe 2 or 1 or 2 locations will come under different license. Ideally, from a legal perspective, the separate set of books should be maintained. But whatever the reasons, if they maintain a single set of books, what will happen, the stock entries will be, the purchase will be made from the centralized level, which means the major company, and the sales will be made at another company. So in that case, you will face an issue of this stock. So instead of stock transfer, we should have made purchase and sale. So when you are moving goods from one location to another location, let us say from warehouse location to the retail location, if they both fall under same license, then there is no issue. But if they both fall under different license, it should not be a stock transfer. It should be a sale and purchase transaction, which should be at again arm's length transaction. That is again a transfer pricing issue should come. Next is shared services and overheads. So you cannot understand the true profitability if the books are combined together, because there are certain costs where the management tend to, or accountants tends to allocate based on the turnover. But it may not be right every time. Why? Because there will be some HR and IT admin activities where combinedly they are monitoring from the head office level, which we need to share to the other small company. So in that case, we need to have a proper transfer pricing policy rather than the traditional turnover allocation. Again, under treasury and cash management. So if you observe, the most of the people or most of the accountants or management will tend to use the same bank account for both the companies. So that is very wrong. Why? Because if you see an individual level, in one company you will see the more transactions, in another company you will see a less transactions. That is again wrong. So what is the solution for that? We should have a separate dedicated bank account for each separate legal entity. Next, financial reporting and equity. The most and important aspect is the retained earnings and the share capital. So one company, the major company will have a shareholding pattern might be different from the other small company, where the number of shareholders are different from here to here. Then it will have a potential risk of estimating all the owners are same for both the companies. But in real, if you check their real documents, it may or may not be same. So, and at the same time, the retained earnings. So retained earnings is a very important aspect to define your net worth. So in the case of the combined financials, we cannot allocate the proper retained earnings between the companies. So we should think we should properly for this purpose, we need to restate the entire years from the beginning in order to have a proper retained earnings. Again, this is an issue. Next, systems and governance. So when the biggest problem from the technical side is when they are maintaining the both books of accounts, so they will tend to use the same ERP, right? So in the same ERP, they will post the entire transactions without having a separate. So for that solution is, we need to reconfigure the system, and we need to differentiate between the two companies. For example, if anyone is using that ERPs, So instead of going in a one string, they should open two companies and they should divide it properly. These are all some practical issues where we come across.
Yeah, I think thank you, Narendra and Mahendra, uh, for sharing your experience and expertise on these areas. Hope it was useful, and we could see most of the attendees to be there till end. We have taken a little extra time, but yes, the objective was to cover more and cover properly. That's wonderful. So even if you have more questions, for sure you can send us an email, and we will try to send the recording and presentation by email because we have your details already. Anytime you can reach out to us if you have any other questions or any more information you require on this topic. As I mentioned, we also provide other services like audit, accounting, and CFO services, value-added tax, corporate taxes, transfer pricing, company formation, PRO services, internal audit, and others. Thank you all once again, Mahindra and Narendra, as well as others who have attended.